I think I addressed it last time we spoke. I said I didn't think it was that big a deal, but I didn't know. And as you say, it really isn't implemented all the way through in different jurisdictions for a few more months. It will probably cause some of the banks to drop out of their gold silver desks. So, for example, Scotia Makata used to be Makata. They were the largest option writers in the OTC market that existed. Then they merged with Scotia, became Scotia Makata. Then they dropped the Makata. It was still Scotia. They were probably way over leveraged, and they're just basically folded up their tent and moved on. I think you see more of that. I think you see wider spreads. I think it's basically good for the market, but I'm not as exuberant as some of my peer group. The best article I think written on it, and it wasn't by me, it was I think by Matterhorn, and I forget the gentleman's name, and I'd reference it. It was on King World News, and I think posted in a few other places. That was about the most level-headed and objective look at what Basel III really means. So is it going to have an effect? Yes. Is it going to be substantive? I'm not so sure. I will say, and I want this to be really well heard, that gold's going far higher with or without Basel III. My two main criticisms about it are, one, why would the bankers create a rule that inhibits them? And you can look at it in kind of the reverse. If gold bullion is not a tier one asset and becomes one, that means it's more valuable, which means you can hypothecate more of it. Think about that. So if you have an asset, you're only able to hypothecate 80% of its dollar value, and the law changes to where now you can hypothecate 100% of its value. Does that increase or decrease the amount of derivatives? On the other hand, where I'm a little fuzzy, and this article did a pretty good job, and I can't repeat it back exactly where I would, the unallocated to me is still a bit fuzzy. It looks like it will be contracting, and that's beneficial to all of us. And here's my last statement, probably the most important of all. Are you guys got your seatbelts on? Ready?
I didn't have, but I'm fastening them now.
Put it on, tighten it up, because here it comes. I would like to know, Brian and Daryl, when in the heck did these banks ever follow any of these rules anyway?
Yep. Banks,
I mean,
banks
really, let me dwell on that just a second longer.
I bet you will.
But it's not funny. But I mean, you've got these position limits. They don't obey those. You've got, congestion in the market, which is obvious, massive sellings of paper, silver, and gold at times. No complaints. You get all kinds of lawsuits. I think there were like 3 or 4 that consolidated them. The court made them put it into a, combined lawsuit. It was dropped. GATA, went into court against them years and years ago. And basically the court said, it was, secret information held on the financial system and they couldn't disclose it. I mean, so again, I repeat, even if everything that, let's say, the most gold, good for gold that could possibly happen by the best interpretation of Basel III in the positive side, so I mean, the banks will obey it. And I really say that in all seriousness. I'm not trying to be funny. I'm not being facetious. I'm being real. They don't follow the rules. So there you go. And then again, following up, gold's going higher, much higher. And the reason it's going much higher is because everything else is crumbling around it. We have a massive contraction in the global economy from a physical standpoint, not from the amount of money being able to be printed. It seems like that's on fire. It just keeps going higher and higher. But as far as supply chains disruptions, semiconductor, food disruptions, less meat, all this rhetoric about propaganda after propaganda, lockdowns tightening down more and more, less freedom and less freedom. A lot's going on in the real physical world that people need to be concerned about. And one of the things about gold is it's as good as gold. You've got to have something. If you have any financial savings whatsoever at all, some of it must, and I repeat the word must, be in the precious metals at this time. Don't delay. Don't worry about the premiums. Get some and get it as soon as you can. I never have given the fast sell card before. I'm doing it now because I'm concerned about everything I just said. And the cyber pandemic. I think that this forward-thinking propaganda machine known as the World Economic Forum that's doing this cyber polygon that they've done 2 years previously that starts tomorrow may not, probably will not turn into the real thing. But we've already had this oil pipeline situation. We've had the JBS meat packing system break in. We had another one on retail. And I think those are trial balloons for, let's say, a cyber attack of more substance than those, which were quite substantive. So you don't want to panic buy. You want to buy when you can get it. Supply chains are open. Deliveries are good. And just do it right. What does right mean? And Daryl and Brian might not agree with me, but look, you need to have some, but you don't need to put your life savings in the metals. But you really need to have some as protection, because if this fiat fiasco finally hits the fire pit of destiny, meaning it's destroyed because so much of it's printed that it becomes worthless. And we will probably have a deflation before we get to that point, but the ignition point has already been lit. You are going to use, or maybe use directly, precious metals, or if not, you're going to be able to exchange them just for what you absolutely need or want to buy. So end of pitch, but I really never get that hot about urgency. But I really think because of the cyber pandemic that I see not too far away, you'd rather have it sooner than later. The old adage, I'd rather have it 6 months too early than 6 minutes too late.
Yeah, David, look, I'm not all in precious metals, but I do believe in the philosophy that Jim Rickards refers to, and that is gold, fine art, and land. It's just that I don't believe, I'm not supportive 100% of his percentages. I'm 90% precious metals, 5% fine art, and 5% land. I think that's a pretty good combo. Brian?
Yeah, look, absolutely, I agree, but I don't have any Picassos. I have 0% in fine art at the moment. David, yeah, like I agree. Obviously, we agree with what you've just said, and Daryl and I continue to buy monthly, quarterly. Whenever we put a few more shackles together, that's what we buy, because I see no need at all to put money in, or currency in the bank. It's absolutely useless there. So, David, I'm going to put two questions together. One's going to be, the first one is about inflation, and the other one is going to be about central banking and what they're doing today. But so to move forward, inflation. There's the most talked about subject, in my opinion, and certainly in the last 6 months, is inflation. Jim Rickards will say that inflation continues around 1.52% because there is no velocity. I'm not quite sure the description of velocity, but that's what he says. Then there is John Williams of Shadow Stats, who says the real inflation rate is 11 to 12%, because he goes back from charts from the mid-80s.
Deliberately ignore the facts because it is, bears on the interest rate that the bond market has. Obviously the interest rate is the return or the cost of money. And if the real inflation rate was reported by officials, then the interest on the national debt wouldn't be financed at the 2% or 1.5%, 1.6% on the 10-year, near 2% on the 30-year. And it would be